Welcome to Simple Investing Secrets. In today's video, we'll review the 10 best dividend stocks to buy in March. So before we get started, kindly subscribe to our channel and like this video for weekly investing advice. Let's get started. Dividend investing provides investors with steady cash flow over the long term. When you reinvest dividend income, the magic of compounding can turbocharge your returns. Over the past 100 years, about 40% of the total return of the S&P 500 has come from dividends. The best dividend stocks are a great way to protect yourself from inflation because they both go up in value and give you capital gains. From 1973 to 2021, S&P 500 dividend stocks delivered twice the return of stocks that paid no dividends. But here's the trouble: a good dividend cannot make up for an underperforming stock. In the same way, a high dividend yield could be a trap that hides inconsistent payouts, bad stock performance, or low growth potential. To help you find reliable dividend investments, Top Analyst has identified 10 of the best dividend stocks available in the U.S. stock market today. These companies have raised their dividend payouts every year for at least 10 years with attractive yields, kept their prices stable over the long term, and increased their profits every year. Number 10. Extra Space Storage Incorporated, ticker EXR. The dividend yield was 3.7%. The 5-year average annualized dividend growth is 14%. Extra Space Storage is a real estate investment trust or REIT that owns and operates more than 2,000 storage facilities in the U.S. The company offers a solid dividend yield and has seen good dividend growth over the last 5 years. EXR has delivered average EPS growth of almost 13% annually over the past 5 years. If that continues, dividend increases should remain sustainable. Analysts expect 6% EPS per year over the next 5 years. The share price has dropped about 28% since its high point in December 2021. However, compared to the S&P 500, it has been one of the best performers, beating the benchmark index by an average of 6.4% per year over the last 10 years. Number 9. Amgen Incorporated, ticker AMGN. The dividend yield was 3.4%. The 5-year average annualized dividend growth was 11%. Amgen is a biotech company that develops drugs for cancer, inflammatory and renal diseases, asthma, and more. It has the second highest dividend yield on our list, and the annual dividend payout amount has increased at a decent clip over the last 5 years. Boosting a dividend requires strong earnings growth, and Amgen has the highest rate of EPS growth on this list. Annual EPS has grown at an average rate of 35.9% over the last 5 years. This rate of growth is expected to slow to 5.1% per year over the next 5 years. The stock is trading about 18% below its all-time high set in late 2022. Declines of around 15% to 20% from the highs are typically an attractive entry point for this stock. AMGN also offers good price stability. Its biggest price decline over the last decade was 25% adjusted for dividends, based on closing prices. All the other stocks have seen larger declines, but none have had declines of greater than 45%. More than half of all stocks in the US have had at least one decline of 50% or more over the last decade. Number 8. Mid-America Apartment Communities. Ticker MAA. The dividend yield was 3.2%. The 5-year average annualized dividend growth is 8.7%. Mid-America Apartment Communities is a residential REIT that develops, acquires, and operates apartment complexes, primarily in the US Southwest and Southeast. The company currently offers a decent dividend yield, and it's seen solid growth in the annual dividend payout over the last 5 years. Analysts expect MAA's earnings to grow by 7% per year over the next 5 years, down from 13.6% per year over the last 5 years. That kind of EPS growth is fuel for growing dividends. Mid-America is trading 32% below its late 2021 all-time high. Overall, the stock has outpaced the S&P 500 by an average of 1.4% per year. Number 7. Texas Instruments Incorporated, ticker TXN. The dividend yield was 2.8%. The 5-year average annualized dividend growth is 14.9%. Once famous for calculators, Texas Instruments now earns most of its revenue from manufacturing semiconductors, and it's the world's largest maker of analog chips. After Home Depot, this company has the second highest rate of dividend growth on our list. TXN has sustained average earnings growth of more than 21% over the last 5 years. Because of this company's strong EPS trend, it should be able to keep paying a good dividends in the future. Analysts expect 10% EPS growth per year over the next half decade. While many other technology stocks saw big declines in 2022, Texas Instruments weathered the storm fairly well. The stock is 14% off its November high. The stock has outperformed the S&P 500 by 9% per year over the last decade, making it the best performing stock by this measure on our list. Number 6. Lockheed Martin Corporation, ticker, LMT. The dividend yield was 2.4%. The 5-year average annualized dividend growth is 8.4%. Lockheed Martin is the largest company in the world that makes things for the military and top industrial stock. It makes fighter planes, helicopters, missiles and missile defense systems, satellites, and space vehicles. LMT has been growing its dividend at a decent annual rate over the last 5 years, although it's the second lowest on the list. Earnings have grown at a stellar annual rate over the last 5 years. Over the last decade, the stock has outperformed the S&P 500 by 8.8% a year on average. Analysts expect a 9.6% annual EPS growth rate over the next 5 years. Like TXN, Lockheed has weathered the tough market of 2022 better than many other stocks. Shares of LMT are only about 4% below their all-time highs from late 2022. Number 5. Air Products and Chemicals Incorporated, ticker, APD. Air Products and Chemicals is an industrial gas supplier and one of the world's largest helium and hydrogen producers. APD has increased its annual earnings by an impressive amount, thanks to its steady dividends. Analysts expect 10.7% annual EPS growth over the next 5 years. Over the last decade, the stock has managed to beat the S&P 500 by an average of 3.5% per year. The stock is trading 9% below its December 2022 all-time high. Number 4. Home Depot Incorporated, ticker, HD. The dividend yield was 2.6%. The 5-year average annualized dividend growth is 16.4%. Home Depot is the largest home improvement retailer in the US, Canada, and Mexico, with more than 2,300 stores. The company is one of the largest consumer discretionary stocks. Over the past 5 years, HD has had the highest average rate of dividend growth on this list. Meanwhile, annual earnings grew by an impressive amount over that period. Analysts expect EPS to decelerate to 5% per year over the next 5 years. All this has allowed HD to handily outperform the S&P 500 by an average of 7.2% a year for the last decade. As the retail and housing markets cooled in 2022, so did shares of Home Depot, but they're starting to recover. HD is 30% below its December 2021 all-time high, offering dividend investors a great opportunity to buy a company with a great track record. Number 3. Automatic Data Processing Incorporated, ticker, ADP. The dividend yield was 2.0%. The 5-year average annualized dividend growth is 14.7%. ADP provides human resources, payroll, insurance and retirement services to corporations. The company has a good track record of increasing dividends, and its dividend growth rate is the highest on our list. It grew EPS by 13.3% per year, and analysts expect 13.4% yearly EPS growth over the next 5 years. That's also the highest expected earnings growth on this list. The stock has outpaced S&P 500 returns by an average of 5.7% per year over the last decade. ADP set a new all-time high stock price in late 2022 and currently trades 19% below that level. 15% to 20% pullbacks are typically attractive windows to buy the stock. Number 2. Illinois Tool Works Incorporated, ticker, ITW. The dividend yield was 2.2%. The 5-year average annualized dividend growth is 10.9%. Illinois Tool Works is a diversified manufacturer of industrial equipment and related products. It makes equipment for the automotive, construction, and food industries among others. ITW offers a decent dividend yield and a very good 5-year dividend growth rate. Strong earnings, which have increased 12.5% a year over the past 5 years, have fueled this. Analysts expect EPS to grow by 5% per year over the next 5 years. The stock has performed very well over the last decade, beating S&P 500 returns by 4.6% per year. The stock has been rallying since mid-2022 and is currently trading 6% below its all-time high. Number 1. Honeywell International Incorporated, ticker, HON. The dividend yield was 2.1%. The 5-year average annualized dividend growth was 6.7%. Honeywell International makes a wide range of things, from aerospace to building technologies, materials, safety solutions, and renewable energy. It is an all-around solid dividend stock, paying a 2% yield and growing the dividend amount by 6.7% per year on average. That's the lowest dividend growth rate on the list, but still highly respectable. The company has had a great run over the last 5 years, boosting EPS by an average of 31.3% per year. Analysts expect that to slow to a still admirable 7.9% growth rate per year. The stock has quickly recovered from the drop it had in 2022 and is currently trading 12% below its all-time 2021 high. Over the last decade, the stock has outperformed the S&P 500 by 1.7% per year on average. Now let's look at what are dividend stocks. Dividend stocks make regular distributions of cash and shares of stock to their shareholders. Investors who want a steady flow of cash buy dividend stocks, but the best dividend stocks also grow in value over time. Here are the key concepts you need to understand when evaluating the best dividend stocks. Dividend payout ratio. This is a percentage figure that represents a stock's annual dividend amount divided by its annual EPS. The payout ratio rises and falls as a company's earnings and dividend rates change. A reasonably low payout ratio of 60% or less indicates that a company's dividend is sustainable. Dividend yield. This additional percentage represents the difference between a stock's current share price and its annual dividend payout. Dividend yield gives investors an idea of how much a stock pays in annual dividends relative to its price. Sustained dividend increases. Even though the dividend payout ratio and dividend yield can help you figure out a stock's current dividend, it's also important to look for stocks whose dividends have gone up over time. Steady growth in EPS and revenue. Dividends are only as healthy as a company's underlying business. Look for dividend stocks that have delivered stable and growing earnings and revenue. Durable competitive advantages. There's no doubt that companies that have paid the best dividends for the longest time also have long-lasting advantages over their competitors. Whether this stems from technology, barriers to entry, high customer switching costs, or a powerful brand, the best dividend stocks have it. How do you compare dividend stocks? There are various ways to compare the dividends offered by different companies. Dividends per share, for instance, tell you the amount of each dividend payment that investors receive for each share of stock they own. When a company raises its dividend, that means the dividend per share increases. Keeping tabs on how many consecutive years a company has managed to raise its dividend per share is one way to gauge the reliability of a dividend stock. Dividend yield offers another way to evaluate dividend stocks. A dividend yield is the percentage of a company's share price that it pays out in dividends each year. This ratio makes it easy to compare the dividends paid by different companies. For example, a stock paying a 50-cent annual dividend that is currently priced at $50 per share has a dividend yield of 1%, the same as a stock priced at $200 that pays a $2 annual dividend. The dividend payout ratio is a percentage that calculates a company's annual dividend by its annual earnings per share. The payout ratio rises and falls as a company's EPS and dividend rates change. A ratio of 60% or less indicates that a company's dividend is sustainable. This concludes our list of the 10 best dividend stocks to buy in March. As always, it is essential to do your due diligence before committing your hard-earned cash to buying stocks or investing in the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.